Hey there, welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. Today is October 12th, and let's get started with the charts. As you can see, bonds are trading kind of poorly over the last month. We're currently at 102.92. Our support is coming in below us, just barely below us, at 102.80 and about 102.70. And remember last week when I said we were at 103 for our support? Well, that's now our new resistance. So 103 is above us, and it's probably going to be pretty tough for us to break through that, guys. Just above that is another resistance level at 103.12, but 103 is the biggie to watch out for. Bonds opened up pretty well today based on the news, the Fed minute release. But guess what? The PPI, especially the core PPI, that is showing signs of inflation. And as you know, bonds do not like inflation. The reason for that is you figure if you're an investor and you're making 3.5%, maybe 4% on a bond, and inflation's at 2%, well, guess what? You're only making, if you're making 4% on the bond and inflation's 2%, you're really only profiting 2%. So inflation becomes a big issue. So that's why the PPI is a big deal. Jobless claims, which also impact inflation, a big deal. So the jobless claims came in better than expected, which really didn't have a huge impact on the market, but I think the biggest thing is going to be the CPI coming out tomorrow. So that's the big one we got to watch out for. We got retail sales coming out tomorrow. There's going to be a medium to light impact from retail sales. So tomorrow is really the big news day. To kind of quantify where we're at, Freddie Mac reported the average consumer in September had a rate of 3.81% and paid half a point to get there. You can go down here to the source. Bonds were trading about 103.40 last month too, if you look at the averages. So to kind of quantify this for you, if we're now trading at 102.92, that's a 48 cents difference worse. So if the average consumer is paying half a point, now they're going to pay, look at this, guys, nearly a point to try to get somewhere around that same rate. So bonds are certainly worse, and we are developing a downward trading channel. So just be careful if you're floating. As far as the projections go, my last projection was a hit, the new projections are kind of inconsistent. Now, in the short term, all the analysts are remaining pretty neutral, especially ahead of tomorrow's CPI. But as far as the long term, they're pretty inconsistent. Some neutral, some bearish. But I wouldn't say there's a very positive outlook that the analysts have right now. It is kind of a, I wouldn't say a doom and gloom, but it's just kind of like, we might trade flat for a while or it might get worse. There's really not a lot of talk about the market really bouncing back right now. There's just nothing in the economic reports that are really reinforcing that. So just be careful. My projection for the next week is 102.70 to 103.5. So that means we could see an upward swing of maybe 1/8 of a point, maybe a downward swing as much as about 1/4 point. So if you are floating, just be careful, guys. So we'd like to hear from you. Leave your comments down below. What do you think is going to happen with the market? And everything likes to be liked, so does this video. Hit that thumbs up before you go. And if it's your first time on the channel, top left, that guy, he'll click on him. It'll get you subscribed. You'll just get a little notification when we release, which is generally every Thursday. And if none of this made sense to you, totally okay. Top right, Mortgage Bonds 101. That'll teach you the basics that you need to know when you're trying to figure out, hey, when's the best time to try to lock in this interest rate? Anyway, that's it for now, guys. Hope you're having a great day. We'll see you next week. Bye-bye.